Ripple has officially announced they're in full acquisition mode, actively hunting for key infrastructure players in the cryptocurrency space. Just yesterday, rumors went viral claiming Ripple is attempting to buy Circle. However, for now, Circle seems to have taken that deal off the table. But here's the twist. There's a massive market shift brewing over the coming months and years, one that could bring Circle back into Ripple's sights. And not just that, Ripple might even snag Circle at a lower price than what's currently being floated. Intrigued? In this video, I'll break down exactly how Ripple could still make this blockbuster acquisition happen. And that's not all. Towards the end, I'll share something even more exciting, my prediction for Ripple's next big target. If the Circle deal doesn't come through, it's clear Ripple isn't done shopping, and I've got some compelling ideas on who their next prize might be. All right, let's dive right in. I'm excited to share this with you. Today, I want to talk about why Ripple might be eyeing a bold move to purchase Circle. Circle, as you probably know, is currently the global leader in DeFi stablecoins. Sure, Tether is bigger in terms of volume, but when it comes to compliance and long-term sustainability, especially in the US, Circle has a clear edge. Now, Ripple isn't exactly sitting idle here. They've launched their own stablecoin, RLUSD, but let's be honest, it's still in its early days and has a long way to go before it catches up to Circle's USDC. So Ripple seems to be thinking, why waste years playing catch up when we can just buy Circle outright and turn USDC into USDC? It's a bold, genius strategy, no doubt about it. The catch, Circle might not be so keen. Right now, Circle's thriving and doesn't have much incentive to sell. They're in a strong position and probably enjoying the view from the top. Circle dominates the stablecoin market with nearly $65 billion, 0 cents under its belt. So walking away from that for Ripple's $5, 0 cents to $6 billion, 0 cents offer doesn't exactly scream great deal. If I were Circle's CEO, I'd think twice too. With a bright future ahead, they could likely pull in far more than $6 billion, 0 cents on the public market right now. But here's where it gets interesting. Ripple and Circle have very different visions for the future of crypto. Circle is all in on a retail first approach, aiming to make its stablecoin the go-to choice for everyone, essentially building a network where users rely on them directly. Ripple, on the other hand, is playing the enabler. They're telling banks, why trust Circle or even us? Let us help you create your own stablecoin. I agree with you on that one. Ripple's model connects these custom coins to the XRP ledger for liquidity, offering a tailored solution for institutions. Two companies, two starkly different strategies, and it's shaping up to be a fascinating race. If I were the CEO of a bank, there's no way I'd go all in on Circle, a small, relatively new fintech company, putting all my money, trust, and resources into them. No thanks. Instead, I'd look to Ripple. I'd say, let's create our own stablecoin, eliminating the counterparty risk of relying on someone else to make it work. Ripple's strategy makes way more sense to me, but let's be honest, Circle has a huge head start with its USDC stablecoin, especially in DeFi markets. In the world of decentralized finance, they're miles ahead. But what about traditional finance? That game is still wide open. Institutions aren't clamoring for stablecoins just yet, and Circle hasn't exactly positioned itself to build custom solutions for those big players. So while Circle has a lead in some areas, the battle for institutional adoption is far from settled. It sounds more like Ripple's territory, but here's the thing. Most big financial institutions haven't embraced stablecoins yet, leaving a massive opportunity on the table. When it comes to DeFi lending, stablecoins on crypto networks and liquidity on decentralized exchanges, USDC is leading the charge. Why? It's simply been in the game longer. USDC is deeply integrated into numerous protocols, making it tough for Ripple to catch up. In DeFi ecosystems like Ethereum and Solana, USDC dominates with the deepest liquidity. Now, if Ripple wants to swoop in and acquire Circle, they've got a challenge. Circle's sitting on $65 billion, 0 cents in tokenized assets, and a $5, 0 cents, $6 billion offer just isn't going to cut it. Here's the thing. I don't see that deal taking off right now. But what's really worth our attention is why Circle's valuation is soaring so high. I dug into the numbers earlier today, and the story they tell is pretty fascinating. Circle's pulling in nearly $1.6 billion in annual revenue. That's massive, right? But here's the kicker. When you break it down, the picture shifts. Out of that 1.6 billion, a whopping 1 billion goes straight to Coinbase. That leaves Circle with just 600 million in actual take-home revenue. And here's where it gets even more interesting. There's a much bigger challenge looming for Circle. Ever wondered how Circle's business model really works? Here's the deal. You hand Circle $1, they give you a USDC token, your shiny new digital dollar. Circle then takes your dollar, invests it in treasuries, and pockets the profit. Right now, this strategy is a gold mine thanks to treasury yields hovering around 4.5%. That means Circle is earning 4.5% on a whopping $65 billion, 0 cents in issued USDC. The result, a staggering $1,600 million, 0 cents in revenue. But there's a storm brewing. Circle is racing to go public. And here's the catch. Going public could leave them vulnerable. If a company like Ripple wanted to swoop in and buy them out, Circle might struggle to protect itself from a shareholder takeover. The timing couldn't be worse for Circle. We're at a pivotal moment in the interest rate cycle, and all signs point to rates dropping and fast. When exactly, that's still up in the air, but the clues are there. Unemployment is creeping up, job growth is slowing, and inflation is inching closer to the Federal Reserve's target. The government reports inflation at 2.4%, while private surveys suggest it's as low as 1.3%. Remember, the whole point of the Fed's aggressive rate hikes was to tackle soaring inflation, which once hit a staggering 9%. Well, here's the deal. Inflation has already eased, sitting between 1.3% and 2.4%. With that in mind, the Federal Reserve really has no reason to keep interest rates sky high anymore. But here's the kicker. President Trump clearly doesn't want high rates either and is likely to keep pressuring the Fed to bring them down. So, long story short, I'm calling it interest rates are on the horizon. But here's where it gets interesting. This could spell serious trouble for Circle. Let's break it down. The US interest rate is currently at 4.5%. For a decade, it hovered near zero, around 0.5%. Now imagine rates dropping back to 0.5% or even 0.25. To your point, the impact on Circle could be catastrophic. With revenue at $1,600 million, 0 cents, a rate drop like that could shrink their earnings by 50%, maybe even 80% to 90%. It's the kind of drop off that could completely redefine their business. Right now, Circle might be living its golden moment, but fast forward a couple years and that $1,600 million, 0 cents, it's raking in from treasury yields on all those stablecoin backed dollars. It could vanish in the blink of an eye. Why? Because interest rates are likely heading south. If they drop back to pre-COVID levels, Circle could be in deep trouble. That $1,600 million, 0 cents, it could shrink to just $100 million, 0 cents, maybe $200 million, 0 cents tops. Sure, that's still a decent chunk of change, but it's nowhere near enough to justify the sky high valuation they're chasing today. Rid of a $5, 0 cents to $6 billion, 0 cents valuation with only $100, 0 cents to $200 million, 0 cents in revenue. That's just not realistic. Ripple, however, is in a prime position to play the waiting game. If Circle goes public at that lofty valuation and interest rates drop, their valuation could take a serious hit. When that happens, Ripple could swoop in and acquire Circle on the open market at a fraction of the price. In fact, it's entirely possible Ripple could snag Circle for $2, 0 cents to $3 billion, 0 cents. Especially if interest rates shift as expected, which seems increasingly likely. The big question isn't if rates will fall, but how fast. If interest rates drop to 2%, which seems highly likely, Circle's revenue could be slashed in half. This would turn them into a prime acquisition target for a company like Ripple. Imagine Ripple snapping up Circle. They'd gain a powerhouse infrastructure spanning both traditional markets and the decentralized dollar-denominated space. It would be a game-changing move for Ripple. But what if none of this happens? What if Ripple can't acquire Circle? Maybe it's too pricey or just not worth the effort. By the time rates fall, RLUSD might already have gained enough traction that Circle's infrastructure isn't as critical anymore. Who knows what the future holds, right? Let's say the Circle acquisition doesn't go through. If I had to bet on Ripple's next move, I'd say they'd target someone like DW Cumberland or a major crypto market maker. Why? Because Ripple's ultimate goal is clear. They want the XRP ledger to drive deep liquidity. We're heading into a tokenized future, and Ripple is positioning itself to become the automated clearinghouse for the entire crypto market. Right now, that role is managed manually by the big market makers, but Ripple is looking to change the game entirely. Then Ripple stepping in to acquire a major market maker, instantly boosting liquidity across the entire cryptocurrency ecosystem on the XRP ledger DEX. Now, That's exciting. In fact, this move could outshine something like Ripple acquiring Circle, even though Circle commands some of the deepest liquidity in the industry. A deal like this could position Ripple as a global powerhouse, not just for centralized FX transactions or prime brokerage deals with Hidden Road, but also as a leader in crypto liquidity by partnering with the biggest market makers out there. While buying Circle might seem flashier and more appealing to the mainstream, becoming the backbone of liquidity across multiple fronts has a quieter yet more transformative potential. Ripple could essentially evolve into a global clearinghouse, bridging the worlds of FX, prime brokerage, and crypto seamlessly. It's an acquisition that could redefine the game, and in my opinion, it's the more exciting path forward. Maybe Circle isn't in play just yet, but if my interest rate strategy pans out and Circle takes a serious hit, given their revenue is so tied to market rates, which are clearly heading downward, we could find ourselves in a position where Ripple not only secures a market maker, but possibly acquires Circle down the line. The possibilities are exciting. Thanks so much for tuning in. I hope you enjoyed this update.